Buying a home with your romantic partner in many ways sounds simple, and it can be, technically at least. But when you have to actually buy the home and you realize later, of course, there's a potential for a breakup, circumstances change, or actually, worst of all, assuming things are going well, you realize you wasted a bunch of mortgage power by having both of you guys on title versus you could have divided and conquered. Those things all hurt in different ways. So in this video, I want to go through some pretty common cases between couples on how they can plan for the worst case scenario and plan for the best case scenario, and really make sure that buying this home is something that really protects your relationship and is a catalyst toward a better relationship, and not a stressor or one extra thing that can potentially jeopardize the relationship. So without further ado, let's jump into the do's and don'ts of buying as a romantic couple. One of the most common questions that I get is around being on the mortgage and being on title. So if you are on the mortgage, you must be on title, and vice versa. So title is the ownership of the home, mortgage is the liability of the home. Lenders want to make sure that you have skin in the game, and if you're on title, you're someone they can go after in case, of course, your partner isn't paying. So that's the first thing. And how do they qualify you? I mean, like any application, it's going to be off your combined income, your combined debt, combined credit scores, and generally all other parts of your actual, we'll call it your financial picture. And I find that a lot of the times, especially with credit scores, couples realize that their partner, you learn more about their past. They had a consumer proposal with an ex-partner, and that can cause a lot of stress. So I think before applying for mortgage, I really recommend to be very honest around if your credit score is lower, you've had any kind of collections against you. Talk about why and where that happened, and if it was something to do with your past partner. It just avoids a lot of awkwardness where I have to mention it or bring it up during a combined mortgage call, because the lenders are going to ask for every single detail. So that's really, really important. I mean, especially if there's any like spousal support that your partner owes and it's a liability, it could harm your mortgage application. So very important to have a firm understanding of like where is your partner at in terms of their credit score and their debts, and make sure you're aware of it so it doesn't come out of nowhere. That's one thing I see can cause a lot of stress. So make sure that's aligned. And yeah, I mean, I think that's like the biggest thing. Also, keep in mind that you have to also make sure that you trust your partner in terms of them getting documents in on time. Sometimes partners do not get the right documents on time. That causes fights between them. So really, this is an exercise to be super aligned with your partner on talking about your past, understanding each other's past, specifically from the financial perspective, but there's always a personal side attached. And that's really step one. And the rest is, of course, showing up and putting in equal effort, because this is a partnership to buy an asset. It's like it's like, your metaphorical kid is his house, right? So I think you really need to be aligned on the same page. And I think that's just the best way to reduce stress and have the smoothest qualification. Here's what I think is probably the most important kernel when you apply with a partner that, let's say, you really trust. You could be married for years. And it's a strategic thing where I get it. You both want to be on title because you are a package, and that might be the most sort of financially safe way to do things to protect both of you. And again, talk to your lawyer about this, but when you apply for a mortgage, they look at both of your incomes and liabilities. And I've had cases where, let's say the wife, she makes plenty of income. In fact, you can qualify just off her income. But they want to put the husband on title, and therefore we have to use his income. And guess what? The way this shows up on your credit bureau for the next mortgage is it says that you both owe the entire mortgage amount. Even though you're paying half and half, you both owe the entire mortgage amount. So if it's a mortgage of $3,000, you owe $3,000 and $3,000. So the household, you owe $6,000, but really you only have $3,000 reality. That's because the lender has to be conservative, that if one of you leaves, one of you is holding the bag for the entire mortgage. They have to think like that. I know it's not fair. So when you both go on the mortgage, you only need one of you to qualify for the mortgage. The other person's mortgage eligibility or power, let's say, to buy your rental property, well, that could be completely ruined. So what some couples do is only one goes on title. and therefore one is on the mortgage, and of course they'll do half and half in the back end. But from like a debt to income mortgage qualification standpoint, you have one person's income and their debt to own that property and get the first time buyer benefits, by the way, if that's applicable. And on the next property, you only have the other spouse who can qualify just off their income and their debt and their credit score. And they can buy that property, and then they're of course fully docked, debt to income ratios on that. So now you've divided and conquered. You can basically buy two properties for the leverage and mortgage power of just one. So again, what are some cons of that? Obviously, if there's a breakup and you only have title on this place and she has title on that, things could get messy. Again, things to discuss with both your accountant and your lawyer. But to be on title out of fear and out of, let's say, principle, when you don't need two incomes to qualify for a property, and therefore you've ruined your qualification on the next place, it's a really delicate balancing act, but it's the biggest mistake I see, or at least something that people don't think through. So really keep that one in mind. Something quite basic, but obviously very important, is budgeting as a couple. Now you have a mortgage, property taxes, condo fees, special levies, and just you buy a bunch of furniture and home improvement. And, it's very important to make sure you guys do a set budget on the essentials and non-essentials. When you're sharing credit cards and sharing bank accounts, you just need alignment on this so you guys can be on the same page. It's going to avoid a lot of unnecessary conflict. These are things that are very recommended to do early and plan out. On the side of even actually before budgeting, this is a big expense I didn't mention a second ago, is that if you are new to Canada and your spouse does not have permanent residency or citizenship, you're eligible, or rather you are docked potential 20% additional property transfer tax for not having PR citizenship. So one way to avoid that is, of course, not have your spouse on title, right? What some people have done is put their spouse on title for 1% ownership of the property, and generally there is a proportionate amount of penalty of just the 1%. Now, gray zone, definitely a lawyer question, but I'm just telling you what some clients have done, found success in, and it definitely depends on the timing of when you do this. But yeah, that's very bad budgeting if you don't do that properly. But just on the basis of budgeting, make sure you guys are on the same page. And yeah, you'll just avoid any unnecessary conflicts. And I really want you guys to have a great time as a couple enjoying this property and growing a family, presumably, whether it's furry pets or, of course, children. Of course, if there is a divorce or you go your separate ways, what happens, of course, is that if there's only one person left on the property, they have to qualify just with their income. They have to requalify. And typically this is around renewal time. And if they can't qualify, then you guys have to sell. So usually what happens, of course, is the home is sold, everyone gets their portion, and it's done. There are also buyouts where, someone can basically give their portion of the property to the other person. They basically cash out their refinance. One person keeps the property, the other one takes the money and goes separate ways. So it just depends on how the math works out. It depends on just what you guys want. Is someone really in love with this property and they really want to keep it, and do they qualify just by themselves? All things that not very comfortable to plan beforehand, but you should have a basic exit plan. Generally, a lawyer can draw a pretty good plan around, for example, like when the property can be sold and what conditions. And yeah, it can help to have a lawyer kind of help you preemptively look at this. And then you should be doing in your head, just do even some basic math, especially if it's an earlier relationship, is that, you might split. So then what is the process for that? Could you actually qualify by yourself? How does that work? Things you can talk to a mortgage broker about as well. And when life happens, you want to have some basic preparation just to avoid any major surprises. Just to summarize, if you're buying with a romantic partner, either you're engaged, boyfriend, girlfriend, married, of course, some things we went over today are to just be really mindful of the what-if scenarios. We talked about credit scores, understanding someone's past, making sure that if a certain smudge on their credit score brings up a touchy story, ideally you know about it beforehand, so it's not an awkward conversation for me on a phone call, Zoom, in person. I think also thinking about, as I said, like, don't waste your mortgage eligibility. If one of you can qualify fully for the home and you want to save the other person's eligibility for the next home, we talked about that. Again, make sure you talk to your lawyer around the ramification and of course the what ifs, because the what ifs can be that there's a breakup. So understand the exit plan. Can someone buy someone else out? Can they even actually qualify to buy someone out? Do you have to sell? And what agreements can you create prior to make sure that these situations are addressed beforehand in a preemptive way? So when it does, if it comes to anything that is not what you planned for, you can get on with your life. So super important things for the couples buying together. I want to commend you for your bravery to do this. I know it's just a big life commitment and there's lots of uncertainty, but there are ways to do this in a fairly smooth way. You can, of course, generally afford a lot more with your partner than by yourself. So hopefully you get the benefit of an incredible, much bigger home. And you're in it together, and it's pretty exciting. It's part of life. So lots of kudos for those that are buying properties together. Plan for the best, plan for the worst, trust each other, be transparent, and enjoy the journey, and just know that things will be okay no matter what happens. So with that, thanks so much for listening. Best of luck, and I hope to talk to you soon.